What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. Today's video, we're going to be covering the SoFi stock. And I'm telling you right now, I've been following this bad boy for well over a year. We are the #1 YouTube channel covering the SoFi stock. And I'm seeing things that are much different from what I've been seeing in the past. Even though SoFi's had great earnings the past, 6 months, we've seen all of those gains after those earnings get absolutely wiped out, usually finish even more red than where the stock was at, prior to the earnings. Guys, we are holding these gains extremely strong. The stock is showing massive consolidation after a 30% plus move, a slight pullback to begin this morning. But guys, the SoFi stock is looking very solid right now, and it looks like we're building up some legs for new highs in the future. Be sure to smash the like button, guys. Let's try and get this video over 1,000 likes, and be sure to subscribe to the channel if you are not already subscribed, and don't forget to drop a comment. We're going to be keeping you updated daily on all the breaking news. And inside of this video today, we're going to be covering CEO Anthony Noto's live interview on CNBC yesterday. And I'm just going to be doing a little bit of an analysis on what I think he says, the positives and negatives, things I think interesting and stuff like that. So let's get into it. All right, guys, we can see the S&P 500 is literally flat. Dow barely red, NASDAQ flat. So everything today, as you can see, has been just a flat day because we had some pretty big gains from yesterday. We sold off a little bit in the morning, and then we're just making a small little reversal. So today's just a flat day, absorbing some of those gains. We can see SoFi is literally fighting break-even green 0.03 right now. So we are holding up all of those gains that we got from, earnings, where we were floating around $6 to $6.50. So massive consolidation right now at these levels. Let's take a look at the volume. Volume is a little bit higher on the high end, 51 million compared to the average of 39 million. So we might get a little bit of a boost heading into the close. The time is about 2 o'clock right now. So there's still 2 more hours to go inside of the day. So there is actually a lot of stocks in the red today. We got the EGAF acquisition. That is Pagaya down 15, Fortinet down 15, Skills down 13, Fastly, Lucid. All these companies pretty much had bad earnings. Shopify 4, Carvana. So actually a lot of growth stocks are getting pretty decent pullbacks today. And SoFi is just sitting in the middle tier. And if we go over to the top, we got some 1% gains. Spotify, Palantir 1%, Roblox 2%. DoorDash 3. If we just go to the top, Coinbase is up 11%. Guys, this stock was as high as 40% today. So a massive pullback of 30%. AMD 6, STEM 6. So it's just another flat day overall in the market. Some growth stocks doing well, some growth stocks doing bad. Let's get into that interview. All right, guys, I'm going to be stopping the video in between, things I see. So I might, let it run for a while. We're just going to be covering the entire interview for those of you that haven't seen it and seeing what we can take from Anthony Noto's view after these earnings.
Jumping by double digits after reporting beats on the top and the bottom line, thanks in large part to its shift towards personal lending from student loans after grabbing that bank charter earlier this year. Joining us this morning is SoFi CEO Anthony Noto. Anthony, it's great to have you back. Good morning.
Good morning, Carl. Thanks for having me.
You make the point that the charter could not have come at a better time. Can you explain what happened during the quarter?
Yeah, a couple things. This quarter was another record quarter of revenue for us, $356 million, up 50% year over year, our 8th consecutive quarter of positive EBITDA. And we saw really strong member growth, up 69% year over year, as well as product growth at 79%. And both of those were our second highest net adds. And then third, we had great contribution from our technology platform revenue, which is a decision we made back in March of 2020 to build out the AWS of FinTech, with our Galileo business accelerating to 39% year-over-year growth. What you're seeing in our results this quarter and the record quarters we've reported for the last 4 is the culmination of our strategy to build a one-stop shop and own the technology end-to-end. Because we have a one-stop shop for consumers, we have products and services that can do well in different markets. So in this particular market where interest rates are high, inflation is high, GDP growth is slowing, there's great demand for fixed rate, unsecured personal loans. And so we're seeing a great trend there. We're also seeing a great trend in SoFi Money. By getting the bank license, we now can give consumers an unmatched interest rate of 1.8% on checking with no restrictions on your spending, no minimum balance. You just have to do direct deposit. And because we have the bank license, we can use those deposits to fund our loans. So we're not just giving consumers a great interest rate on checking, which is driving great direct deposit and great spending. We're also funding our loans at a lower cost. And we're also seeing really great demand in SoFi Invest. We're the only place you can buy single stocks without commissions, fractional shares, 6 of our own proprietary ETFs, 6 of our own proprietary robo accounts, and cryptocurrency. And so that diversification that differentiates us with the consumer is playing itself out in these numbers, despite the carnage you've seen in other places.
Right. Talk to me, go back to money accounts for a moment and talk about the pace of deposit growth, because there's some pretty interesting stats in there. And I wonder also how much of that.
Guys, I told you that was a huge factor. The first question he comes at Anthony Noto with is about these deposits, guys. I'm telling you, these big hedge funds, these whales are taking this very, very seriously. That's why I believe we're not seeing those gains getting wiped away. They are loading for the long term now because the stock market is forward looking. So he goes straight in deposits, guys. This is the first thing CNBC wanted to cover because it is very, very important. And I'm telling you guys, SoFi got a lot of airtime. This is one of the longest stretches I've seen them let Anthony Noto get. I mean, he literally talked for 5 straight minutes. So as you guys can see, what Anthony Noto said is we have products that, do well in different types of environments. High interest rates, low interest rates, it doesn't matter. Different products will do well, and that's what SoFi is. It's a one-stop shop. So in any type of environment, they're going to be able to, bring those products to the customer whenever they need, whatever they need, no matter what type of return SoFi is getting on. They might not get a great return on mortgages right now. As you can see, they're going down, but they're still going to be offering them. And then as soon as mortgage rates come back down, their mortgages are going to start exploding. It doesn't really matter what type of environment the market is in. SoFi has enough products.
Sure. So the big difference in SoFi Money, which is SoFi checking or savings externally, is that we're now able to offer an interest rate that we determine, not some bank that's sponsoring us is determining. And because we're a technology platform, we have lower costs. And we're taking those lower costs and giving the consumer an unmatched value prop and being able to do everything they need to spend and to save on their phone with a 1.8% interest rate. We can fund that 1.8% interest rate because we're not borrowing money from banks to lend to people any longer, and we're making more of a spread. That interest rate has helped us drive deposits to $2.7 billion, to your question. It took us 3 years to raise $1 billion of deposits, and it took us 3 months to add another 1.6 billion. And so the strategy.
Guys, 3 years to raise $1 billion, another 3 months to raise another 1.7 billion. Do you understand what this bank charter is doing? Their deposits are skyrocketing. And now that they're offering this 1.8% APY heading into the NFL season, we could see the highest member growth all time. So everything is falling into place with SoFi. We just need to get student loans back on the beginning of 2023, and you're going to see just EBITDA explode, 100 plus million out of nowhere, revenue explode, $500 million. So it's just a matter of time. We have to remain patient and understand that the big whales are forward looking, and that's why, this company is getting taken seriously because, it's not a meme stock. They have $2.7 billion in deposits.
It has multi-prongs to it, and you're seeing it play out in the lending, checking, and in the deposit side of the equation.
Anthony, it seems to me like, first of all, it's fascinating because it's part of the promise.
Guys, this dude that is interviewing Anthony Noto right now, this is one of the toughest CNBC analysts or, anchors or whatever that there is. I mean, this guy comes hard with these questions. When a company's not profitable, he literally laughs through the entire interview. And he knows that SoFi is not profitable, but I'm telling you right now, this is the first time, I've seen him pretty, blown away. Just look at him reading up on these numbers about to ask these questions. This is a tough guy right here. I like him. He's pretty good. He's pretty legit, and he tells it how it is.
Of neobanks, what you're seeing play out here. But when it comes to the deposits and the amount that you're able to offer in the interest rate, you have to be able to calculate that correctly. And I guess you have to be able to keep your personnel costs, your labor costs to a minimum to maintain efficiency. So can you talk about your approach to hiring and labor costs and your approach to calculating risk that's going to keep you out of hot water when it comes to those rates that you're offering on deposits?
Sure. One thing investors should understand about SoFi is we've been in belt tightening mode since March of 2020 when the pandemic hit. The president announced a moratorium on federal student loans, in that those with federal student loans did not need to make payments, and that has now lasted for 2.5 years. That used to be our biggest and most profitable business. We did over $2 billion of student loan refinancing originations in Q1 of 2020, right before the pandemic. This quarter, we only did $400 million. So it's down to 25% of where it used to be. Through that time, we've worked hard on diversifying. We've worked hard on making sure our costs were in line with our revenue outlook, and our risk and pricing was also appropriate. And that's why we've been able to achieve record revenue every quarter since Q2 21. As we think about our business, we want to focus on the long term and make sure we don't shortchange investing for growth. But at the same time, we have to be responsible and drop profits to the bottom line. So we focus on driving what we call a 30% incremental EBITDA margin. That means for every $100 we generate in new revenue year over year, 30% of it we try to drop to the bottom line to show the world that we can be profitable and have a 30% margin. And the other 70% we reinvest and make sure we can sustain growth and it can be durable through the cycle, which is what we're proving today as we have for the last 2.5 years.
So guys, he pretty much summed it up that, we can handle any type of environment, and that's why we beat our last 9 months of earnings without our student loans for 2.5 years, which was our most profitable business. So SoFi is killing it without their best part of their business, most profitable, student loans. So imagine when those start firing back. I mean, this stock is going to absolutely explode. Revenue, EBITDA, profitability heading their way. It's just a matter of time. So we know that Biden is running out of time. He has eclipsed almost 3 years, literally midterms, 4 or 5 months away. Biden has, pulled all the strings to get it to the last second. He's trying to rack in as many of those voters, that are in that age gap, 20 to 29 and something around that range. So we need to get those student loans back. SoFi is navigating these hot waters extremely well, and we could see that, we're holding up our gains. If we just go back to the stock right now, you can see the stock was at 805 the day after earnings. The stock is literally at 823 right now as I'm filming this video. So we have maintained basically all of those gains. This is absolutely incredible. SoFi right now, I went on my Twitter and I said, a good price target right now is around $16. That is around 10 times sales. Other companies that are trading, that are bigger companies, Microsoft trades at about 11 times sales, Tesla 16 times sales, and even Apple is around 8 times sales. So we are growing extremely fast and compared to Microsoft or Apple, okay? And you can see Anthony Noto is reinvesting, 30% to the bottom line. They are still investing in growth very aggressively. So 10 times sales is literally a fair value for some of these legacy companies that are growing, 10 to 20%. So I feel very comfortable with a $16 price target in this type of environment. But in a bull market, I mean, we've seen some of these growth technology stocks, cloud, SaaS, go up to 100 times sales. So I feel very comfortable at 10 times sales. Once again, $16 price target. That's going to be a market cap of around, $14 billion right now. So that interview was very stellar. As you guys can see, the CNBC analysts were very impressed with the deposits, the navigation of SoFi, and they gave them 5 minutes of airtime almost, which is, one of the highest I've seen for SoFi. And guys, the stock is holding up extremely well. We're in consolidation mode, and I bought a tiny bit today as well, and I have, thousands of shares. I think over, 8,000 shares at this point. And I really don't look to trim anything until we, at least clips, maybe $20 or so. I'd probably, trim like 30%. For other investments, real estate, stuff like that. But I think we have a lot of room to run into the back end of the year if the CPI data can come down. Remember, guys, CPI data is less than 6 days away. And if you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you guys. I'm going to tell you how it is. I know some of the stuff I, was saying, prior to earnings, sound a little bit too bullish. But I told you sooner or later things are going to start clicking with this bank charter, and that's exactly what happened. And this bank charter is about to go full throttle. So guys, I'm telling you right now, this stock is for real. And if you want to be updated, this is the #1 channel to stay updated. Be sure to smash the like button. Let's try and get this video over 2,000 likes. Be sure to drop a comment, and don't forget to subscribe to the channel. Let's try and get the channel over 15,000 subscribers. Once again, my name is Kyle. Hope you have a great day.